Hey guys, it's Jeff Trapp here with the Jeff Trapp podcast and the Tax Planning Pros, and we have breaking news. So the one big, beautiful bill has finally gone through the Senate. I think last month we talked about it going from the House of Representatives to the Senate, and we finally have a framework, which I think we are probably getting to the red zone on this bill. I don't know if we're ready to say that it's final. I know that the president would like that on his desk by the 4th of July to sign it, to send everybody off on holiday, with this thing being wrapped in a pretty bow. So what I want to do today is kind of jump into the framework of what is in the Senate bill, what they took out of the House bill. And, hopefully next time when we're chatting, we'll have a nice, pretty wrapped bill. And I know we've talked about this bill ad nauseum, but it really is the foundation of how we're going to do tax planning and tax strategy for 2025 and probably for the next several years, because this really is an extension of the 2018 Tax Cuts and Jobs Act. So let's dive right into this bill and go right through it. So the Senate would like to add an additional $1,000 increase in the standard deduction and a $6,000 deduction for seniors. That's up from $4,000 of a bonus deduction from the House bill. The SALT limitation, the state and local tax limitation, they want to extend this at $10,000, which I'm absolutely shocked by, and make this a permanent provision with some limitations of how this would work with the pass-through entity elective tax credits that you might get at the state level. And you see these pass-through entity elective tax credits for businesses. They're able to deduct their property taxes or income taxes via their business to get a tax deduction. And, in the House bill, they were talking about $30,000. They were talking about $40,000 for this deduction, but instead want to make this permanent. And I think what we're seeing here is a negotiation of, additional tax breaks for other provisions that our congressmen and women have deemed more important than the state and local income tax limitation, such as the next provision here. The child tax credit would be increased by $2,200 beginning with 2025. It increased from $2,000 from the Tax Cut and Jobs Act. The House version would make the jobs inflation adjusted 2000 credit permanent, but also would increase the credit further to $2,500 for the 2025 through 2028 tax year. So this would just be adjusted for inflation. And then the Section 199 qualified business income deduction, if you do have a business, right, you get to basically, if you earn $100,000 in that business, you get a $20,000 deduction. You're only taxed on $80,000. Well, they would want to make that permanent at 20% versus 23% that was in the original House bill. They want to cap the no tax on tips at $25,000 per individual. No tax on overtime will be capped at $12,500 per individual, $25,000 married filing joint. It both will begin to phase out $150,000 if you're a single taxpayer, or $300,000 of married filing joint. So there's going to be some limitations and caps on there. You can't take all of your wages in tips, unfortunately, right? And so some other provisions here, one that all business owners are looking for, myself included, is the 100% bonus depreciation and current expensing for the domestic research activities, and decreased business interest limitations would be made permanent rather than temporary in the House bill. And retroactive provisions would apply for the current expense deductions for certain taxpayers. So that's really interesting. What of these provisions is going to be retroactive to earlier in the year? What is going to be permanent, maybe middle of this year, starting next year? We will see. But really excited. I know a lot of our business owners are excited about the 100% bonus depreciation coming back, so they can buy furniture, fixtures, equipment, write off those leasehold improvements 100% on qualifying property, as well as those gross 6,000 pound gross vehicle weight SUVs and trucks. So G-Wagons just, they just went up in price because now people can write those off 100%, right? So we'll keep an eye on that provision and see what that does, because that affects a lot of our clients. I know that the Trump administration and a lot of Senate and House Republicans did not want to make these tax cuts permanent because they wanted short-term economic growth, people to invest their money sooner to get some tax deductions. The dependent care assistance exclusion would increase from $5,000 to $7,500 beginning with the 2020 tax year, and a child and dependent care tax credit would increase from a maximum of 35% to 50%. So this helps out a lot of folks who are working, obviously, and need these deductions because they pay for childcare and things like that. And part of these provisions too, keep in mind, is, you can't be a 1099 employee. You have to be a W-2 to receive some of these benefits. Non-itemizers will be able to claim charitable deductions up to $1,000 filing single, $2,000 married filing joint, rather than the $300, $600 cap that was in the House bill. And then, the Senate bill doesn't contain many of the health savings account expansion provisions contained in the House bill. The qualified small business stock gain exclusion would be revised. That is huge because, we have a lot of business owners where a C corporation makes sense, and we can exclude the gain on the sale of their business up to $5 million. That's huge. And so it's really going to be interesting what the final provisions say there. So we're going to keep an eye on that. And there's going to be a different repeal dates that apply to various clean vehicle and clean energy credits and deductions. So as you know, in the House, and this is the whole reason Trump and Elon Musk were fighting a couple of weeks ago, is they were going to get rid of all the clean vehicle credits. Sounds like there's going to be some kind of phase out of those credits. So it sounds like they're going to be around for a little bit while longer. Like I said, we'll keep an eye on everything while you're out there on summer vacation, having a good time, played in the sand, in the water at the beach, or maybe out in the mountains to cool off a little bit. So you go enjoy your summer vacation. We'll keep an eye on the one big, beautiful bill. And, we'll chat next month in July. I hope you have a wonderful, happy 4th of July as we celebrate America and, celebrate a nation that was founded on no taxes. But I digress. Anyways, if you like today's episode, please like, share, subscribe. And if you don't have a tax strategist that's helping you save money on taxes, feel free to book a call with our team. We're more than happy to help you out or point you in the right direction. So once again, I'm Jeff Trapp with the Jeff Trapp podcast and the Tax Planning Pros. And I look forward to seeing you next time. Have a great one. Bye-bye.